In the last video, I mentioned Bill Williams as far as there's an indicator in MT4 that does fractals. And the fractal's created by 5 bars. And it's kind of a volatility, and it's picking the spike as the turnaround. And it's really showing you all the perfect entries you missed in a way. So you want to get in at that level. So here's a video. If you do the search for Bill Williams, here's something that was published 7 years ago, and the guy's out of business right now. He's, if you go try to find his site, and 65,000 views, and not a lot of comments, and it's just really hysterical. And this is how people are losing money, thinking that they can take something from a book and use it to trade with. It's not going to work. And here he's not even talking about the size he's trading. Now here is also a video with Bill Williams admitting that it's a bad place to get in the market. This guy's going to try to drop down the 4-hour chart for entry. And that's, of course, a broker dependent because the wicks would be different. You have different fractals, technically speaking. There's on a 4-hour chart, there's 4 different fractals because there's 4 brokers that handle that time zone. And their 4-hour charts look completely different. Not completely, but if you're going to trade on closing prices, they are completely different. If you're trading the turnabout, so here is the presentation by the expert traders that are out of business, go figure. But this is conventional wisdom out of the book, taken to the market, and listen to this poor guy try to put on a trade. So it's very entertaining.
I think you should wait for another sort of confirmation, and we actually should think that you wait for the daily chart to form the fractal, and then you manage it on the 4-hour chart, and this is essential. Never trade fractals on a time frame lower than the daily chart. Okay, we don't recommend it because you'll get overwhelmed by the number of false signals that you get.
Incredible, huh? Look at this. He's got the Bill Williams alligator on there too.
Okay, so here's a fractal, and there is where we want it. We want it on 1.6065. Now let's go over to the 4-hour chart, okay, and let's see where that is. So that's back here. Right, so that's over here.
I think it becomes painfully obvious that you wanted to buy that triangle and sell that triangle. You want to buy that triangle and sell that triangle. The only way to do that is place your orders down here on the triangle. So it's telling you where to put up buy limits. It's telling you where to put sell limits, but not for this guy. He's going to trade the breakout of this. So why wouldn't he just why wouldn't you? This is the argument for range trading right here. Right?
Over here, here it is. Right, so this is the fractal we saw. 1.6053, round about that level, 6065. And this is where the fractal is formed. Now the only time, so let's add this here. So this one we want to enter here, right? So that is the daily fractal, and we manage it on the 4-hour chart.
The daily fractal managed on the 4-hour chart. No. How about the 4-hour fractal managed on the 4-hour chart? This is the first problem. So what he's trying to do is maximize the wave entry, right? He's trying to say, well, let's look for the wave within the wave and try to tighten our stops up. We'll manage it on the 4-hour, entering on a daily fractal. Well, you know, anybody that can see breakouts become the retest zone, which is the bottom becomes the top because the people that bought are holding here and they experience this drawdown. They immediately get out when they're even because people like to be even. And it also is a breaking through that, and but it's in a downtrend. And so he's going to cherry pick this chart in it's hysterical to watch him try to over filter a trade. He's even looking for more confirmation than a stuffed pig. And here, take a look at this. So
when it breaks the fractal, which it does, it breaks it on this bar here, where the horizontal line of the cross is. It breaks it on that line. Okay. Now when it breaks it, we don't enter the trade. We wait for the bar to close below the fractal. If it doesn't close below the fractal, we've got no trade, even though it signals. This would save you a whole load of false signals and false trades. You want to wait till that candle, sorry, not candle, till the bar closes below the fractal. Let's zoom in here and go down to where the fractal is, right? So let's just see, here it is, yeah. Right, so
just on this one broker, right? This is a 4-hour chart. So on another broker, your signal would be completely not correct. If you're going to be so strict in your rules and so precise, because a backtesting robot would have, looking at that one broker, if you take a 4-hour robot and run it on a different broker, it's going to perform differently. It has different history. It has different closing prices on the 4-hour signal. So right there, 4-hour charts, you need to have 4 brokers if you're really going to run robots, because you have to let that robot find the best setup.
So we want to wait for it to close below. So it has closed below. So here, it closes below, and we say, okay, cool, we enter the trade now. No, you don't. You don't enter the trade. So it's closed below, but we want more confirmation than that. What you need...
Now, is anybody getting the idea here at this point that if you have the time to look at a 4-hour chart, you've already traded here, you bought here, like you bought these volatility breakouts. You have a confirmed low, you put a buy limit in here, you got buy stops trailing. You're looking to fill this. This is how you make money, is on the fill of the void. So all the easy money is made on just this stuff here. He's trying to... how would you even psychologically look at this and not see that, hell, if you just traded a fractal only on low volatilities, yeah, that breakout makes sense because it makes sense for everything. But to put to think that, well, when we take out this fractal, which is just a range trader's dream, that you're going to cherry pick this one bad trade. Like if he was cherry picking good trades, I'd say, you know what, good cherry picking. But he's not even picking good trades out of this. But this is the beginning of teaching on the internet. This is 6 years old or something on this thing. So take a look at the it's hysterical. How much confirmation this guy waits for. I mean, man. Meanwhile, people are trading the shit out of this on the 1-hour chart. Don't forget.
Is you need a penetration and then confirmation of momentum. So once
I always get the penetration, and because then it's like, hey, you know what? Now we're really in love.
This bar closed below, you're going to wait for the next bar to take out the low of this bar. So I know what you're thinking. Oh, this is confusing, but it's essential.
Not at all. No, I'm having an anxiety attack because I'm too impatient. Can't we just fucking make some money here already?
This is another thing that will save you. That will save you a lot of bad trades. Because the Forex market is so big, because they're trading about 3 trillion a day. I mean, last year there were 1 or 2 days when it went up to 8 trillion turnover in one day.
No way, man.
When you get a push for a trend, it's a push of billions and hundreds of billions of dollars into a direction.
Push. So
you get a lot of false signals. It has to go up like a wave and then come down.
Whoa.
Right, so therefore you need the confirmation, the penetration, right, and the close below this level.
Well, I'm all over that.
Level, which is from the daily chart. This is the 4-hour chart, remember? This is where we're managing the trade. And once it closes, you're waiting for the next bar to take out that low.
Oh, so okay. The next bar. Okay. And then I could run low volatility breakouts here and be making money all along the way.
What you can do is once the 4-hour chart has closed there, you can actually put a...
Actually? I love it when people preface stuff with, no, really, actually. No, actually, I knew a girl like that. She would say, well, actually, and I'm like, well, what was the other shit we're talking about? You're just like not dialing it in enough?
Sell order in to go in here. And then what you do is you just wait for it to take out that low. So where do we put our stop loss? General rule that we know.
Oof, I can only imagine. This is a dry run. Could it be this fractal or this fractal?
Normally use is put your stop loss at the nearest up fractal. So what we want is we like to also put it above the alligator. So here's the nearest up.
The alligator. Now this is another Bill Williams. You know what? This is just he's destroying the whole. You can't even take a trade in here on this choppy. You just moving averages are bullshit. These are offset moving averages, by the way. There's so many filters on here. You know, Bill Williams. All you do is all you do is make a fractal. The rest of the stuff is complete ridiculous garbage. He'll even admit that. He's like, you know what? This is for the common folk, people that want a stupid system. But no real trader is running the alligator.
Up fractal, and it's above the alligator, so we will put our stop loss here.
Above the alligator. Fucking, you mean yeah, that's the old joke about trading is that if you're losing. If you're getting whipsawed in the market, then every time you move, every time you trade, you're losing. So it's like in alligators, every time you move, an alligator's just chowing more into you because every time you move, it's a chance for him to open and close.
It's quite a long, fast stop, but these are long-term trades, so you're looking for a lot of pips.
For a lot of pips. And don't forget, he started off this saying you can make 18 to 1 on your money in these trades. This is the setup you'll never see. And did you trade it big enough to really make that 18 to 1 ratio really work for you?
About, at least 300-400 pips on these trades. Okay, so then what happens? You go down, and it goes down here, forms another down fractal, and then goes back up and forms another up fractal. These couple of up fractals are just completely invalid because it moves down and into consolidation, and it goes up here. So what this offers us is
how those invalid? I mean, man, in fact, you could draw a trend line on these, just completely, it's just so not the way to trade Bill Williams.
An opportunity to move our stop once this moves down. So what you would do, you'd move your stop loss from up here to down here, it's still above the alligator, and then down here, you can add, because this is a down fractal, you can add to your position. You can enter the trade again.
Okay.
So add to your position.
But don't you want to add on this, not because of this fractal, but because of what's happening right now? The problem with the fractal is, doesn't even matter anymore. This is all that matters right now. So you'd have to be on the 1 hour fractals. I'm not suggesting you even get in on fractals. What I'm saying is that this is where you want to be in the trade, and after you see the fractal, you think, yeah, I'm a genius. Yeah, I bought down here at that fractal. So you want to make enough money range trading. And here, sideways, this can be volatility.
And then what we're waiting for is we're waiting for it to break the low of this new fractal that has been formed. Break the low. It sort of did it on that one. It generally did it on this one and then took it out. So we'll enter the trade down here, move your stop loss to up here, and then wait for the trade to make its move. And then it goes down to here. And then generally, if we see ended, we tend to exit the trade.
Okay, generally. Man, look at this choppiness here. My God. You just got to take the money and run.
And because, we don't want to stay in here forever because it could move back up and all our hard-earned pips could be lost. So over here, on this first trade,
of course,
you would have made, what is that, 1666. If you exited around here, see that's 400 and something pips, and then add to that from here to there, that's another 200 and something pips. So altogether in this move you would have made about 600 pips if you adhere to our rule. So you need to use a little bit of discretion on the exit here. The stop loss, there are very strict rules.
This is discretion means this is marketing speak for ignore your system. Ignore the system I just showed you. Now let's start cherry picking. Are you a discretionary trader or are you rule-based trader? So you're a rule-based trader, you're obviously a mechanical trader. Unless you're and you're still a mechanical trader if you say, well, this is how it's written in stone. But if you look at a market go sideways for too long, you're like, okay, maybe I have to throw out my moving averages because I always know my moving averages get choppy and give me bad signals during this. So why use the moving averages? So, it's like a crutch you would lean on every 3 days. You have no crutch, then you have a crutch for 3 days. Why? Like, can't you just walk? Well, no, I kind of like this crutch. I spent a lot of money on it. So, that is. Wait for confirmation.
Your risk. But over here, you need to ensure that after about 4, maybe 5 up fractals, before you really see a downward push, exit the trade, take your profit, or make your stop extremely tight. So here's one example for a trade, and I hope you learned something out of that.
Sure did. So here, now take a look at I'm going to run a strategy tester run of the fractals. I made the biggest fractals I could, and I'm thinking in terms of this is where I want to buy. I want to have sold at those fractals, so how to get into those trades and using the fractals post-confirmation. So that means I'm going to hold the trade. If I see a fractal and I'm on the right side of the market, it means hold on. Okay, hold through the next. You got in. In fact, even think about getting out after the fractals formed in some way. So you need 5 bars to make a fractal. So you're going to anticipate the market is the 1 hour euro dollar. And so I'm going to try to run strategy tester, which you hit Control R or you go to View, go to strategy tester, and you load up data here. Now, it doesn't matter. It kind of matters for how fast you want this to launched. Now, I'm just going to run the moving average that came, the default EA that comes, and you can adjust this thing and actually make money. I was playing around with this. You can make money, but the trick is the right time frame for the moving average. Once you dial that in, you can curve fit that in some manner, and it'll occasionally work. You get some, but it's when you play around with the money management tools of how big you're betting, that's when you see dramatic changes in anything that you do. So you can build an entry system, but can you get the sizing right? What you'd have to do is, you could build, this is possible, build 10 moving average robots. They all trade on the same currency pair. They each have their own special money management things. They need their own maybe magic numbers. And they're all simultaneously trading that one currency. That's almost possible. But it's still not going to do better than a human being, because you know, they say robot surgery. It's robot assisted. You just have hands that are hands that are smaller than your hands, but you're still moving hands, right? You're moving real hands. It's like virtual surgery. It's just you can't get your hands in somebody's body the way you can get in with extension of your body in form of a robotic tool. So obviously manual trading is always going to trump it. So here you pick a symbol. I'm just going to pick the euro, I guess, or here, pick the dollar yen. Who cares, right? And I don't even know if this is going to load, because I don't know if I have enough history in here, but let's pick a date. And the first date, you'd have to say, pick today. You always have to use date today, because otherwise it's going to take in everything. So I start off with today's date. Then I use 2, and I'm going to pick today's date. And then I'm going to take this and walk this back on the calendar. And I can take a sample. I can also change the other date. So I can go back in the time machine here. Just pick an arbitrary day. Here, I maybe not, I don't want to pick this day, because maybe the tail end of that. Now, here's the critical part that you can force an EA to look like it's making money, is make a fixed pip spread. So here I'm going to make it 1 pip. It's not going to matter. I'm not testing the robot. I just don't want to see a big spread on the screen. Or maybe you could set it to the spread. This is a 10 pip spread. You could set it to where your stops are set. And if you plot the asking, so here's a 3 pip spread. This is bad. This is your typical bad slippage, and a retail fixed pip broker would give you 3 pips, so on dollar yen. Then you would say, I want to see visual mode because I want to trade it, and this is going to be critical to speed playback, typically right around here, depending which broker and how thick their data is, how much volume they have. It's going to right up here, 30 to 31 to 32. Otherwise, you're going to be almost in real time down here. I think this is supposedly real time. And we just run it. So we're not going to go skip to, which would be if we want to see the results, but we don't care. And we'll see all the bad trades that the default robot takes. So you could fade the robot and probably make some money here if it was calling out the trades, but it's not. So we run start, and now we're going to see this come up, and I build. Oh, so it won't even run. So it just blew out that whole no data there or something. Something's terribly wrong. So let's go to the euro, maybe because I never plotted enough back on that. Wrong time frame, maybe. Bad spread. Maybe there's no data on this broker. Here's a Forex gambling tool. Maybe MACD is going to work better. Oh, can't get that to load. Okay, let's go for the half-hour chart then. Different time frame, maybe. Okay, so I got to run on the 4-hour chart. Let me throw in the template that I wrote to pick up these fractals. And so now here you can train yourself this could be any. Oh, I see the problem here. Maybe the data. There's a big hole in the data back here. Okay, that's a problem maybe. Anyways, you can see the past fractals. We're just plotting this right now. We speed this up to a very fast speed here. Let's say 32. See if we get through this chart to some degree. So it looks like there's a big hole in the data here. That's why it wouldn't track. I'm playing back this at maximum speed of 32. So I'll just pause it to keep up with the trading. And we are buying right here, see? So we're buying here because we have a fractal. And this is a grid of 50 pips, mind you. So I put up a 50 pip grid here. Look at the indicators, 50 pips. Now this is not 100, and see, it doesn't really matter. Okay, so you got to be cashing out about right now. So you're just going to rehearse the 4-hour trades. Now, you would just be hard-pressed to find a better entry than putting your orders at these turnarounds. And if you can get into the code and make these bigger, I have these set to the biggest fractal, which is 5. You could make the fractal so big that you could put orders on top and bottom of that fractal to get the that many orders in there. 50 pips, right? 50 pips stop buying heavily right here in the. Now, if you get the fractals to show up on the down moves, it'd be sweet. But this is your ripe for the pickings. You're not going to put a buy stop at the top of this fractal and manage it on the 1-hour chart. You'd be out of your fucking mind. What this guy did in the video is ridiculous. Now he would say, well, see here it worked. Look at this. Put a buy stop there and I made all that money. Okay, great. But wouldn't you be like, okay, after this big move, let's just bracket this mechanically with buy and sell stops. And look at, we have 2 buys. Where here you only have 1 buy. Sure, that's breaking through, but look at this. Look at this. No fill here, right? But look at all the money you're missing when you could be buying. You could be putting bracketed volatility breakout systems running here, plus the trap trade. So you want to be short. After that, you may be cashing out. Hopefully you're cashing out because you're coming back into this and you're going long. And after you go long, you look back. By this time this bar paints, this fractal is showing up. See, now the fractals are going to show up. This fractal shows up at this point in the game. And so it's total 5-period lagging fractal. Hindsight city. You wanted to buy this, see? You're getting this because you're on the 3rd bar painting. This fractal is showing up because this is comprised of a lower, 2 bars lower. Why did that show up? Because you had this. This is the turn here. Now they paint the fractal here. You see, you need 2 bars before it, the fractal. 2 bars after, the paint job of that shows up later. This is a perfect V. This is why you're seeing the fractal there. 2 bars with the highs. It's based on the highs, not based on the inside. Here, the turn. This is slightly higher than that, and you've got this. This does not show up until you're here. Complete lag city. You need to have been long here and cashing out up into this, and you go the other way on the trap. So you trap trade the wick by wick. Not to mention, you just made money here on the breakout. With the scalp, you have to build scalps into this. Here you could get chopped, but where's the next trade? Buy limits here, right? I don't know what's coming. You have to train yourself to not know what's coming. Confirmation is for other things. Making a payment. When you make a payment online, you get a confirmation number. You can't trade with confirmation numbers. Well, confirmation that you're filled, that's what we used to get. They call you back with this is your ticket. But you're not looking to confirm a move that's a big move's coming and let's go, we need another filter. No. You shouldn't be trading, really. It's going to take you so long to make money. So I'm playing this the fastest playback possible. But you can see here, buy stop, sell stop. Low ATRs, put on the hedge now. Right. Still waiting to get filled on buy limits down here in Disneyland. You got buy limits sitting down here. Okay, you're about to get filled on the buy stop. Why try to decide where the market's going? Maybe you're still holding from this entry. Maybe you're adding now. Right? It's 4-hour chart. Come on. Okay, now you're scalping out. Sellers are coming in. It could pull back. It could be a trap, and it's going to rape down. Looks like it's going to follow through. Watch the behavior when you get to the top of this wick. Look at the sellers coming before it even gets there. So watching a 4-hour chart, you don't need to drop down to the 1-hour chart. That's the micromanage. Okay, you got to have that chart up already with orders based on that, with trigger pulls on that. You can't be on the 30-minute, you can't be on one of these high-speed trains and be on a low-speed train. You can't be a traveler and be on two roads. You need different accounts or you need different things going on. Okay, you're hog long now. See, the fractal just showed up, which means you're a genius to get in on a buy stop there. And let's not forget the micro stop out. Are there any stops in here for people that bought this fractal and traded backwards from Bill Williams? So, yes, your buy limits are here. You got a buy stop there. Okay? You need to be able to rehearse this entry. This is not bad. I'm not back testing here. I don't even know the data coming up. Why would I lie? Right? Not charging. So what am I trying to... Here, see, the sellers came in right at the top of that wick. See, I was paused because I was painting. Gee, I can't imagine why. Now, buyers are going to come in. In fact, this ATR is so big here, you could have had sell stops there. You could have cashed out of your winners and see, those ATR breakout, 25 pip stops. I'm on a 50 pip grid. You're running 25 pip stops. So now the buyers came in. Go figure, right? A retest of fair value of that doji. See, you had buy limits down there. So trading's about buying and selling. Being nimble. Okay, you just made a mint. See how that works? You just made a mint. But you have to have these orders on deck ready to go. And you can't be looking way the fuck back. You can be if you're a patient person, which I'm not. I'm not going to be waiting to get filled on a sell limit here. I want to go long into that. What am I going to do in the meantime before we get up there? If that's your target, this 4-hour chart, mind you, this is really, if you can train yourself on the 4-hour chart to do structured trades, range trades, you'll clean up. Okay, sellers just came in there. Gee, I wonder why. See, your sell limits need to be up there for the scalp. Okay, you scalped out. Now maybe you go long. Maybe you're still holding long. Maybe you got buy limits sitting at this below this wick where you know the buyers are it's going to be the best prices in the world down here. What people call the sweet spot. But it's the sizing. You get that sizing right. Know when to scalp. Maybe you're flat now. I don't know what time of day this is. And right here, doji. Doji close, put on a hedge. You made 10 pips. Fractal just shows up. Buy stops above this low ATR here. So you have to have scripts that are designed for ATRs. I just got filled. Now that's a breakout on the 4-hour chart, and the reason why you would take it is because the ATR is small. Now they just took out that fractal. See how it just negated that fractal? That fractal started showing up. Bye-bye, gone. This may be the target up. This is the target up here. The sellers are going to come in at this wick. Okay. See them come in? pull all the way back to that wick, then up again. You don't need to be on the 5-minute chart. And you can see this vacuum is about to crush. You could trade your whole world on the 4-hour chart. You never need to drop, because you know right now sell stops, right? The sellers that come, your sell limits right here. This is, how long? 4 hours straight up? Really? Gee, I wonder if it's going to pull back. Not to mention that's Friday. We just put in the, this is Friday's close. Here comes Sunday. Anybody want to buy down here? So it's a perverse game. There's no confirmation in this. You need to have buy limits here now. Hopefully you went short on Sunday night on the trap breakout. You have buy limits here. You have buy limits here. The ATR is too big here to put stops in now. So you're not in stop mode, you're in limit mode. So you have to know which mode you're in. It's about modalities. You have to have something you pull. You need something in your playbook. See? Buy limits. You got filled here. You're long. You're scalped. You're out. That trade's over. There's no ATR small enough on the 4-hour for you to justify playing the stop game. You have to play the limit game when the market's telling you, okay, see that low? Put a buy limit there. That's how that you won't believe it until you run a 4-hour chart all weekend long. Just let it churn and take a look at it every now and then. Train yourself. Rehearse trading. You cannot backtest stuff. You're fooling yourself. You're giving yourself a false sense of positive outcome. This positive expectancy shit, this is bullshit. Life's fucked. You're going to lose. How do you accommodate the volatility of the market? Okay, so buy stops maybe now, right? Low ATR closing here. We're getting it. This is an inside bar now, which means even lower. Okay, buy stops and sell stops now, right? ATR is below the threshold of your threshold for PIP punishment. This is dollar yen. Now, you could play the same game on the 1-hour chart, but you're going to have to really work. We just got filled in a sell stop here. Are we trapped? I don't know. Why do you care? Look it. It's working for you. Let it go. Wait another 4 hours. Buyers are going to come in here, right? There's what the buy limits are starting to fill now. Now maybe you're buying on limits. And you're getting out of that short. Now you're in. Maybe you're in a hedge now. Okay. ATR is too big on the 4-hour for you to place any more stops. Now it's a limit. It's a volatility limit trader's game. Okay, maybe you scalped out. Maybe you did just what I said there, and you did that. I don't know what's coming. You got to be able to go bar by bar here. This is like AA. This is one day at a time, one bar at a time. Fuck looking to the left. Fuck it. It doesn't help you. You know, you need to deal with volatilities hour by hour. What's the last hour's volatility? What kind of, this is presupposing you're a day trader. On the 4-hour chart, what is the last structure level I want to buy limits? And I said right here, here's your buy limits, right? Now, we could keep, it looks like we're going to crush down here. You need to be able to buy these on limits. You're not donating anything to stop entries now. The ATRs are too big. It's a limit traders. Okay, you're getting filled. Now, if that doesn't retrace, you are going to lose on that trade. You know that going in. They're filling your limits right now. You can't do any stop entries. Okay, maybe they just blew you out. Okay. How many orders did you put in there? I think we're going into some crush down now. Okay. 4 hours. You cannot put a buy stop or a sell stop in now. You have to let this play out. You need to get stopped out of this thing. Or you're buying, or you're thinking way outside the circle, outside the square. And the more it moves, the deeper you start throwing orders out there. You got dry powder, you're buying right here. You're buying all the way down. Now this market can move down 40 hours. I've seen it. I don't know if I'm there on the data stream, but There's moves where it just keeps going down the whole week. Right? Down again, you're buying more. Every 50 pips. Now we got a small ATR. You can put a buy stop and a sell stop in. The ATR is still 50. It was 100. It was 75 pips on the last 4-hour bar. Now the ATR is pushing almost 50 here. Still crushing down. On the 1-hour chart, you're killing it. If you're looking for small ATRs on the 1-hour chart, you're killing it. But if you have a day job, you're just buying every 50 pips. You're loading the wagon for a swing. You may never get it. There's scalps built into that. Look at this, another 50 pip wick, no stop entry trades here. Can't do anything about it. Okay, now you're making money on some limits possibly. You have to be able to you have to have a blend of different entry styles. At the market, you could have bought every 4 hours it went down at the market here also. Now, you have to be willing to lose to win. And we're coming up on a closing. Now, this is the middle of the week. This is about the middle of the week here. Huge crush down. If you were on the daily, I can't really go to the daily here because, here we are. Go out to here. Huge buy limits all the way down now, in my opinion. Buy limits, you're gonna plunge by this. Insane crush down, coming right up on these stops in this liquidity. I'm in here now. I'm in huge position. I'm letting the market decide how big I'm going to trade. Also, if I traded evenly spaced buy limits. So you have a huge buy limit grid out there, and you're waiting for a small ATR on the 4 hours. So we're going to wait here. We have our first 50 pip. That last one was beyond 50. This one was here. Okay, now we have 50. We put buy stops in, but now those have to have stops that are very liberal, and now you've got to trade really wide. If you're going to trade the same size you were trading before, if every ticket's a 1K or a 10K. In pockets, mind you, it's really, say you're long, seriously long, you bought every 20 pips this drop, which means now you're in a really big position. Seriously big. Now you put in buy stops, say, right here, or you could just wait and sit on what you have. If your in's too big, if you got carried away, right, it's like a limit bender, you sit on this. You can see your exits on the way back. If this is going to be retrace, maybe it is going to go to hell. Now if you bought at the market here, this is the best buy at the market trade because you bought at the end of a doji. You also bought when the market was running out of gas. So now you're in, say, 5K based on buying every 4 hours it's down. You don't want to buy on stops unless the ATR is really tiny. So here you can put a buy stop and a sell stop in the ATR right now. 25 pip ATR on the last 4 hours. Put a buy stop and a sell stop in there and go with, maybe it is going to tank, right? If that's true, you want to go with that flow. Because you can see these currencies can move literally 40 hours, never a higher candle on 4-hour chart, 10 bars down. It happens over and over again. So your buy stops filled here and tighter stops on the tighter the bar, the tighter the stops. Okay, maybe you scalp that. And if this thing makes it back to all these tickets become above water, now the discipline would hang through. If you tell yourself, well, that's on my swing trading account. I peppered that thing with limits. To commingle your scalping with your limit trading is always going to be a money management nightmare, because you can't manage that account properly to extract the maximum out of what that swing trade could do. Built into that, built into the orders you place down there is a predetermined, I'm saying scalp built into that. But if you're really a scalper, you're on the 5-minute chart and the 1-hour chart, and you're just like feverishly doing lots of trades a day. Like but you could do scalping. You still in the background got the swing trade. You see the other account. It's cleaning up. You could take off that. Now you maybe scalp out of that. You see they just clip that 4-hour bar, and you go flat and you put buy limits at a retest of here. So you don't know if it's coming back here. It might not. But this is the thing. Small ATRs here, buy stop, sell stop, right? If your mechanical system would be doing that. Your mechanical view. Okay, you didn't get filled on the sell. You're buying more now. Maybe you're still holding the original position. And you're adding on volatility breakout on the retrace coming back in, bar by bar. ATR is too big now to put in stops. You have to sit back and let it play out. Maybe you are scalping out of the stuff in right here is that they just chopped that wick. Maybe you go flat here on the whole fucking trade because you just made so much money. Now you can come back and put in buy limits on this top. Maybe this is going to be the top that comes bottom. Maybe you're still holding. So this is all up to how much you want to win and lose. It's always going to be right staring you down. And maybe this engulfs the whole week. By the end of the week, we come back to this fractal, and you're like, man, I should have stayed through the whole thing. Of course, you should have always done something different. This is where, and the next time you do it, you say, okay, I've got to trade a skosh bigger, and I got to hold in the skosh longer, and I got to do, so the sellers should come in right here. Painfully obvious, right? Boom, here's the sellers, right? See the breath in the market back off there? Who didn't see that coming, right? Now, I swear to God, I've never seen this move. You have to test yourself. You have to pick random segments of time and see the scenario play out, the auction scenario. Now, we could totally engulf this week, right now. The ATRs are too big. If you're not holding through this auction right now, you're so pissed if you got out on this bounce here because you lost so much on that smash down. Now you're above water on these trades. So swing trades, small order, giant stop. Big order, tight stop. If you want to keep your risk the same. Look at this thing just now. The robot's buying here, and it just took profits. The system, and I think I might have actually monkeyed around with this thing. I think I put it to 6 periods. I don't know. This is not the normal 9, whatever the thing. But isn't it funny? The robot finally took a trade after all that. That goes to show you, right? The sellers are coming in up here. I wonder why. And the ATR is so big here that if you put all your orders on the treetops, on the wick tops, right here is your sell bank kicking in. Now the robot bought there, and look at the fucking punishment that robot took. Now just take a look at that. This is pretty much, I think this is real data. I can't go to the 1 hour, unfortunately, and show you what happened there. But I think we all know what happened there. We fill the void. We start coming in and triggering my sell limits. I sell, 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 sell. Monster fucking unbelievable scalp back. If you weren't taking profits on this and you were looking for it to take out this, well, I'm just going to stay through the whole thing. Okay, now look at you, right? Scarface, now look at you. I told you, no kids. Now, you buy here again at the body retest. It probably could go up now. But the ATRs you're waiting for, the ATRs, there's no way you could trade that candle. If you weren't in during the auction here, you could have sold up into that. You could have played the, okay, let it fill this thing. Sure, I'll take all your stops off your hands, buddy. But bam, come in here. Are you nimble enough to scalp that, come back and realize that it's not going to go like this now? It just, liquidity executed. Thank you very much. Cha-ching. Took out all this money management robots. When people talk about algorithms, all it is what people have taken what they would normally do and converted it to a robot. So the robots trade like shit. The algos trade like shit. Money management, if you're short here, right? I've done it. All my bad trading, I've made into a script. So if you're losing at manual trading and then you say, oh, who's not going to take what they think is the right thing to do and computerize that, thinking that's the way to go. Well, what I've done is I've taken all these things I've learned and I built an algorithm. Okay, it's kind of making money, but the market's so perverse that you got to do the opposite of what you think you should do. And you can't wait for confirmation. All these orders here, if I held them, I made this, I made this, I made this, I made this. This one I cleaned up, okay? All those ratios with the right sizing. That's the holy grail. Did you have enough dry powder to buy a 200 pip plunge on the dollar to the yen? Look at the zoom out here. Where do you think this thing turned around at? You could have had pendings based on logic and reason all the way to here. Like, it didn't quite hit it. Double fractal bottom. See, in the zoomed out picture, you're like, well, of course I'd buy that pullback. And you can reload now. I'm already thinking of, if I bought there I'm already out. I'm selling now. If I scalped that and I traded that bounce, I'm out. I can see this is going to get quiet. And maybe you're coming into the last day of the week now. That kind of trading, if you just made that much money, you have to see, here's buy stop, sell stop, but that's still a 50 pip wick. You really have to, also at the end here, maybe still holding a little bit. Okay, your buy stops are going to get filled here on this, and maybe it's a trap. If this is a small ATR on this 4 hour, then, but see, I don't like to chase. So here I filled long, no short fill. Now I put a sell stop below here. Now here's where maybe I get chopped. We got a triangle in wicks. Closing prices is as if nothing ever happened. Got to realize that for the, hope this isn't going to fuck it up. Delete the objects. That for the closing prices, it's like this wicks never happened. This 150 pip fucking wick range bar. See the dynamic range here? You go from 50. This is 3x. Where was the mechanical golden golden grail entry? Right here. Small ATR. Get in. Hold it. Dump it. Maybe here. Now here, they are going to chop you, see? They've trapped you on both legs, but if you have scalps built in where you're willing to take your 20, 30 pips on this breakout, you're hopefully you took something off the table on this one. Here, the ATR is too big. Limits are filling. Your buy limit orders, so you're trading all these different strategies simultaneously. Buy limits start here. You know you have to have buy limits trailing. And you have to trade the break out of that. So you cash out of something here. Maybe you do get chopped. Maybe you are break even, but you just got in here at a great price. Let's see how that unfolds. Not so good. So here once again, buy limits are filling. Fill, fill, fill. I will take this off your hands any day at the week at the tip of that last thing all the way down. Oh, buy limits fill. Fill city here. You have to play retrace now. There were no entries. If you loaded up on this, the smaller the bar, the bigger the entry. You are in profits here. There are no trades on the 4-hour chart. The one thing about volatility every 4 hours is you know what to do and what not to do. You know which trades to take. Quiet markets need breakout strategies or hedges. You could put a hedge on. You could have a symmetrical hedge on here with stops that were stops and take profits that were basically you're going to get chopped, right? You know that's going to happen. But instead of getting in a stop, you're already in the market. There's no difference. Stops, bracketed stops are still hedges. It's just that there's a slight bit of confirmation, but you can just get as brutalized as there's no surviving. There's no escaping that once this breaks out, it could, in other words, trap one leg of your thing. So if you put the hedge on at the market and your stops are now your exits, it doesn't matter, right? Because we're grid trading that at that point. Here, you're still waiting to get filled on limits. And if you scalp something off of this bounce, maybe you're okay. Still looking to buy, though. I'm still looking to get filled, and I'll buy all the way down for the same thing I did back here. I will repeat. They just filled my... Now, you have a lot of orders because you have two things here. Here's your fill window for your limits. Okay, now you're up. Now, hopefully you put a 25 pip scalper in there. Now you scalped out. You scalped out of something here. You're going to hold the rest of that and even put more limits below. It seems unreal, right? But now maybe you're holding through this pullback, and now you got small ATRs here, and maybe you bought the market orders come in every time it goes down. So you always know what to do. If you see the market close down, you buy at the market. You buy at the market, and here you wouldn't necessarily because it's going up. And here, if we close here, you don't buy at the market. And the ATR is going to tell you when to put the stops in. You're already long on limits because it said this is the top, inside the bottom. You need limits here. So it's a tactic. Trading is a tactical issue. It's totally, you have to be a tactician, okay? If you think it's a war, when the enemy comes up behind you, that's the wick coming up into the, right, is a raid. They raid that. Well, where would be the greatest place to take profits? At a retest of this, where the party got started here. If you think this is Elliott wave or some ABC shit, 1, 2, 3. We will revisit one possibly, which is a triangle, which is just a cluster, a node, a market profile. It's the bulge. It's the value area. You trade value. Here, buy stops are being triggered. Mechanical entry. You put on a bigger trade on this last 4 hour because the smaller the bar, the bigger the trade for breakouts. Or you put a hedge on down here. Now you have to, now you're expecting that all these limits you bought and all these market things to retreat. It may not happen. So now you got to put a sell stop here, and now you got to go Bill Williams, which is make your parachute. Of course, I'm ignoring these fractals, obviously. I'm trading bar by bar. The problem with the fractals is waiting for 5 bars before it even puts in this stupid fucking triangle. So, and if you saw that fractal, at that point there, you're always going to trade, I think you're always going to trade volatility because that is what's going to make you get rich and get poor slowly, because all you have to do is look at a 4-hour, 150 pip candle on here and say, how could I have traded that? Okay, now we're long. We're long by default here. We're still holding maybe our buy limits from the plunge earlier. Could we engulf the week? We could take out the high of the week now. There's no telling. News is coming out now. We're long on stops here. We had no fills on the sell stops, right? Let the market decide. What's wrong with that? Okay, now you're up 100 pips, or you're up 50 pips on these breakouts. And maybe you're up from this thing. You're up 100 pips from here. These are 50 pip handles, by the way. So some of them are hundreds, right? But I'm just showing the 50s. And so here is the pullback to the scene of the crime, the breakout. Pull back to the breakout area. But hopefully you've gotten the hell out here and you see where you should have sold. You need to sell the tops of these wicks. The ATR doesn't matter on these guys. It's the fact that you're filling that. You got to go the other way now. Now you're going to buy in limits. You dumped everything. We're above water for a few seconds here. You have to get the fuck out. And here we go down again. Do you see any bias? There's no bias in what I'm trading. I'm trading bar by bar. The overall trend is irregardless. We're looking for liquidity to get filled. Here, buying. Buy limits, right? All the way into that. Your sell stops, if they're still pending, you want the other way. No ATR trades. You just got filled on a monster buy limit bank down here that started here at new lows. You have to have a dynamic range where you can place in 150 pip grids, you can place in 10 pip grids. You need to be that person to really extract a ton of money out of one instrument. Diversification in order placement, from broad to narrow to dense to broad. Size could be the same because the dense orders would be naturally bigger sized. So imagine you placed an insanely, right at this yard line, you have a 10K in single tickets with a stop here, and it's looking to make this much. You can hand place those orders. Most people aren't going to do it. Or you can drop a grid in there. You can just build, and there could be scalps in there. The more work, the less the risk. Look at how we just trapped this thing. So trap to trap. You can see the trades now. This, if you were long here, look at, and then you go short here. It's like long, short, long, short, long, short. That's where all the money's at. Buy, sell, buy, sell. No stop entries on this. I didn't cherry pick this part of the data. This is how the markets really are. I swear to God, do it on any currency pair. You're going to see this shit. Sell limits triggered, cashing out 100 pips. Buy limits triggered, cashing out 100 pips. That's fucking trading. That's money. Waiting for setups where tops become bottoms, maybe on the 1 hour. That is not the only trade plan you can run. Not to say those aren't good trades. Range trading is, high volatility range trading is get rich quick. Seriously is, you won't believe it till you trade it. Now you're getting filled on limits again. And if you're still short from up here, can you imagine? You're up how many pips? Dollar yen. You're buying here. You're scalping about right. Now, I've done these trades. I trade like this. I'm out. Boom, I just made 50 pips. That's how I trade. Look at that. You're still holding? Okay, I've just padded the account. I might be flat right now. It really depends. You've got to have these tactical, you've got to be nimble and tactical. Fuck everything else. Fuck moving averages. I hate to keep swearing, but I'm so pissed when I see the stupidity out there. It's about price. It's an auction market. Look up auction trading. Okay? We bid it up. We run out of buyers up here at the Wix. Go figure. What the fuck? It's also revisiting this apex of this triangle. It's going to revisit. It's going to come to the scene of the crime. These markets return to the scene of the crime. What's the trade now? Buy limits below here. No questions asked. A huge fucking grid. You can't believe. You lay it out there. Do you know what's going to happen? Can you see the future? Look at it. Retested this. Go figure, right? Retested the doji. Buy limit. You're a genius. 4 hour. Never looked at another time frame here. That's another thing. Strategy Tester does not allow you to change time frames. It's a good training tool to test your nimbality, your nimbleness. It seriously is. Look at the things. Still long a fucking 10K up here. Totally underwater. Look at that beautiful trap trade the robot took. So, yeah. All weekend long you watch this shit. Look at, I'm fucking cleaning up my exits here, obviously, right? And it's like the end of the week's coming here. So just let this play out. But yeah, Strategy Tester is forward training testing. And I don't need to bring, I should know what trade plans are designed for ATRs under 50 and ATRs that are 100, 200 pip ATRs here. 300 pips in 4 hours, wick to wick. You don't need to back test that. You need a trade plan of limits, sell limits, buy limits. There's no way. Now you know the trade. Put a buy stop, put a sell stop, but maybe not. It's huge ATRs here still. And the end of the week's coming. We expect this market to quiet down. We could go and take out the low of the week still. What am I doing? I'm buying the new lows on this 4 hour, no questions asked. Here we come down. Buy. It just got filled. Possibly. I scalp to here. Now we let it go. More buy limits are filling. Let that baby fill me up. I'm scalping to the 50. If I bought every 2 pips, I got my finger on the trigger. If this is a scalping account, I just scalped out. Now I got other buy limits to fill. If it's predetermined that it is going to be a scalp, that's the way to do it, because you're predetermined this is going to risk 8 pips to make 12 pips. This is going to risk 16 to make 32. You could make greedy ratios, but you're going to pay more in commissions because you're going to get stopped out of stuff that when the market drops, you can't make every stop tight and you can't make every stop wide. So that's diversification in money management. Just in that alone is enough to make you rich. What they call rich, right? To make you money, because you're not looking to another currency pair, right? You're not jumping all around. Oh, I'm over here, I'm over there. What's the Australian dollar? Who can get their brain around that? And who could manage all those tickets if you're just a one person? I'm assuming everybody that's listening is they trading their own account or they don't have a staff. See, if you went with the high risk stop entry here of a 75 pip ATR, if you have the stop width to trade that, you're short right now. See, here we go into new lows. Close out the week into buy. Still buying. Look at the hole. You can buy all the way to here. All the way to here. If you got enough dry powder, you're buying all the way to that breakout. Now you're holding for the scalp. As we retrace, whatever it would do, sometimes it doesn't retrace, it just keeps tanking. You got to realize that. And the money you made here, if you're not careful, on this giant wick to wick strategy. Okay, so now we're making something here on the pullback. Got to get the spacing right. You have to do the math on that coverage area. This is no difference than if you're going to open up a franchise, you're going to open up other stores. You got to know some of those are going to fail. If you try to overbuild anything, you can't go out too far. Okay, still getting filled on limits here. I don't know if we scalped out anything there. Unless you wrote in a 10 pip scalpers. Now, more buying. Going to buy here. I'm going to buy there. And maybe I'm buying every 4 hours it drops. I buy a very small position with a 100 pip stop every 4 hours it drops. And the more violent the drop, the more certain I am. I have confirmation while the process is, okay, here we are, Friday. So I'm long. I'm holding over the weekend. The small ATRs here. We got buy stops above coming into the session on Sunday. It's Sunday now, I think. And we have buy stops here to trigger. We're still holding. We held this whole thing over the weekend, white-knuckled it, filled on limits, psychotically 200 pip, 300 pip stops, $30 on a 1K, 300 pip stop. That diversification. Or maybe you got a swing account that's picking up these traps, these limit things. Low ATRs, you just got filled on buy stops here. Now you have sell stops below too. We could still keep tanking. Is this outside of your parameters? Maybe, because see, these are baby. 25 pip, 4 hour ATRs have not shown up yet this week. And if you rewrote to a larger risk, if you dialed in, now this is a robot, would have to say, well, I'm going to go for 50 pip stops because he's never going to make any money if he keeps getting stopped out. You could trade with 100 pip stops to make 50 pips if it was a high probability. And here, this is what you would also be doing, is risking $10 to make $5 because it's a higher probability that you can survive this plunge that just happened. And now we're coming back up. And see, you wanted to be long into this, and the fractal's telling you, okay, great, hold it. The fractal's really not telling you shit. And I really wouldn't trade fractals, honestly, but it just was hilarious to watch that guy try to trade it. Here you're long, and you have buy stop and sell stop. You have small ATR under 50 pips now. You can run the tighter, fatter trades. And here you're going to be a kind of a power scalper as you break out of this 8-hour 50 pip range. It's actually been going on for 12 hours if you consider this one down here. This is the beginning of 2 hours of sideways. So you could have sell stops here, buy stops here. You're trading that. You're going to go into volatility breakout mode now. maybe you're still holding these longs here. You have to be a compromised person. You have to be a compromising person. You have to be able to go both directions. Now here, you just got filled on sells and you're going with the order flow by default. Now you have buy stops that might still be pending here, depending on where you're at and what you've done so far and what you can psychologically handle. Maybe you're getting filled on buy limits in this trap right here. Maybe you had buy limits sitting at a retest of this that haven't filled. So you're short, they trapped you. If you have and you're still long on those other tickets, so having this flexibility of, and the guy's asking me about percentage risk, 1 to 2%. How about 0.001% risk to 20% risk? In other words, you give yourself a spectrum of risk. You can't live in a box of 2% risk. You're never going to be able to work in and out of the market. You can't coexist in a market that is so violent that you've only got parameters that allow you, like nobody drives cars with suspension that has a like you ever drive a motorcycle and the front fork, they give you how many millimeters of crush that the suspension can take. You can't have cars that only give, unless they're race cars with really solid frames, you can't drive in a cushion like that. So the cushion is it's a money management cushion, but you need a giant cushion. You're jumping off a fucking building. You need to have 20 feet of cushion. So you're distributing that risk as you come into the cushion incrementally. You could do it in MT4 now. That's why I'm talking about it, because in the old days you couldn't do this, so I'm excited that you can do it. So I'm just saying, hey, why make it so difficult on yourself when you have now here you're getting super small ETRs. What could possibly be going on here? You really want to bracket this, okay? This is going to be a hairy explosion. We've been treading water in a 50 pip range for 20 hours now. This can't go on forever. There's going to be probably a breakout trap and then go the other way. Now, this thing, you're either putting on hedges right now. Maybe you're flat. Maybe let the market decide what you should do. Bracket it. Hold your previous longs. Let those go. Now, this is going to take a lot of will to not think in terms of bias and trying to look for other confirmations and should I be in this trade. Just put on the hedge right now. Hold your longs. Let those stop out. Every time you see a bar under 50 pips on the 4 hour, you're putting on a hedge. Now you're in really big now. You're in big because based on everything that's happened, and maybe you're even getting trapped on, now maybe you don't want to trade limit orders here, but even if you did, this tight stops and you're still scalping. See, you just made money on a scalp, a trap. So here, maybe buy limits, maybe you scalp down. See, that might be the trap. This is the wick. We just took out this zone. Maybe there's follow through, but we don't know. You have to be okay with not knowing. Big hedge on now. Still waiting for some major follow through to kick this out. You're still long, let's say, because we're down at the bottom here. Okay, now you're getting filled on buy limits, and maybe you're short from this. If you're willing to risk more, or you're short from these wicks. The ATR here is just about 50 pips, so maybe it's too big for you to get in. You only chance to get in was down here. Now you're starting to make money on the breakout. You thought maybe it was going up. You're still long on the limits from before. But don't forget, during this session, you need to trade super big here. You need to be in a big hedge here. Okay, now you're making money on, you're getting stopped out of possibly your limits, but you're making money on the breakout. Did you know it was going to go up or down? No. If you trade, you have to trade a lot of tickets. You need to be a trader. Okay, you cannot just say, "Oh, well, here, see, it didn't work." No, you can't be like, "Here, it didn't work." No, it's working all the time. It's how did you design each individual trade plan. Now you're long on limits. Hopefully you cashed out of the breakouts here. That hedge is destroyed. Maybe you are still holding some monster stops that you have on this pullback. And you're adding to, you just went long here. No stop entry. There's no ATR breakouts to trade. Wish I could speed this up. Coming down to buy more here. And you have scalps built into each plunge buy. This is sideways for so long, and maybe you're still cashing out of targets that you set to make 100 pips with a 50 pip stop here. Because this is such a giant position to unravel, hopefully you're making up what you got stopped out of here. You're making up because I said here, you got to get in very large. This is 1 day of 50 pips. This is like 2 days of 50 pips. Now, buy stops come in here. Your buy limits are filled. Hopefully it's going to retrace. Here you have sell stops maybe. If you can take this much risk. See, this is going with the flow. Small ATRs, sell stops are triggering. Buy stops are above, limits are filling below. If you're still short from this pack of orders. Okay, so you're hitting targets or getting stopped out. Or maybe you're flat. Maybe you've just blown up your account. You're going to have to see that if you made money here on this is very small here, sideways action. Here you're buying on limits, waiting to put in bracketed buy and sell stops. This is proof there is no holy grail. It's about tact. You have to be a tactician. Unless you can sell into that, I wouldn't. I would be a buyer on smash downs. Of high volatility smash downs, I'm always a buyer. The spacing needs to be as wide. Like if you get a 100 pip move down, you're going to have to place your orders in 100, 200, 300 pips deep. This giant ATR is telling you the market has velocity, momentum down. You need to run those grids bigger. So this is where the diversification is coming in. You have to go from 20 pip ranges to 200 pip ranges. You need a 10x approach to your diversification. You just got a buy stop fill here, low ATR. A buy sell stop, you needed to put a hedge on here. Were you awake for that trade? Were you around to take this entry? Another consideration. Be realistic. You can backtest this shit every Tuesday, come up with a perfect trading model. Can a robot enter that trade and make sense of it? Would a robot get his ass kicked trying to trade breakouts here? Yes. Can you see the floor being taken out? Can you see where we're onto here? Can you see what we just tagged? You bought here anyways, right? This is where you hope to get. This was the target for the bears. So it's a revolving door. You scalped out of this. Let's hope. And the ATRs are small enough that you're still buying on limits now. As it drops, I know it seems unbelievable, but you got to stick with the dual approach, limits and stops. Stops come in small ATRs. Limits are coming in. When you see big candle, throw limits out in front, below, because we're expecting it to keep going down. So it's going down into our order bank. Here you have maybe a buy stop and a sell stop on this. The ATRs are heated up here, so you have to have trade plans that would adjust to that. Now you got to trade wider, smaller and wider to keep your risk the same. Maybe hit a buy stop here. This is really for somebody who has a day job because you look at that thing every 4 hours maybe. Here you just got filled on more limits, maybe, or you're still holding this original underwater trade. Now you're underwater on this, so you're swing trading and scalping at the same time. You're underwater here. You remember this big hedge you put on? If you didn't cash out along the way, when you go long here on this buy stop breakout of this hammer, maybe that's going to take you long. Maybe that's going to trap you and it's going to keep tanking. But as you were cashing out of this, you were loading up on the limits. Now you're coming above water on your worst. Your best trade's making money now. They're about to trap these wicks. Possibly we're going to bust here. There's a vacuum that's been forming above this whole time. Don't forget, this is the hole to fill now. Whether it fills or not is inconsequential. It's how did you get into that? And we have a small ATR on this last one. We just got filled in a buy stop. We have a sell stop here. So we have a hedge running here. And will we get follow through up into here? We don't know, right? Will we get trapped and chopped here? We don't know. So you don't know. And getting these, getting the spacing right, getting the sizing right, and maybe you just trade limits only. You don't trade, but I don't think you're gonna do so good because you need to have a dual strategy approach to cover the anomalies that come up. There's going to be plenty of that. So we got filled on our buy stop. We never got filled on our sell stops right now. We're still holding limits from the fall out of bed here. We go sideways. I think this is like Wednesday or something here. Okay, now we're winning, right? And of course, after this is all said and done, should the market engulf this whole thing and come roaring back up, you're going to say, I wish I would have set my targets higher. I wish I would have done this. I wish I would have tried. Always going to say that. If you're not saying that, you're not trying to get better and make more money. Every time I do something, when I'm done, I say, I could have done it better. Of course you could. And who's not trying to improve? You don't get a system and go, oh, here, I wrote a robot, now sit back. It's never going to happen. The robot needs to be a learning robot if that's the case. Okay, so now we're going to go sideways here for a while. And psychologically, could you handle watching a robot trade for you? I don't think I could. I'd say, what the fuck are you doing? Just like that trade up that I just showed you. Moving average crossover finally worked out. Thing bought way up. It's still long from up there. Don't forget, we're still in a bad trade here. We're long from up here. Might be right one day, right? So do you think it could crawl out of a hole here? You could still do analysis on a 4-hour chart. As this is coming down in case you broke the trend line, it doesn't mean anything. Look at ATR strategies are coming in here. Sell stops are getting to you. A super small ATR, you should have been on that. Were you awake for this entry? Now you're making some money. You got scalps, you got this, you got that. You're still holding the longs, believe it or not, right? But you scalped that opportunity on the ATR breakout. Your limits are filling down here. Stop entry into limits. Stop entry, you just scalped to that now. Buy stops. Still pending possibly. Still sitting there. You have to be a very dynamic person to trade one instrument all week long on a 4-hour chart and take advantage of every mechanical, everything the market's telling you. Hey, put some stops around me. Hey, bracket me. Hey, hedge me. Come and hedge me. Come and throw limits out and scatter them out in front of an insane price that you can't believe. Hold me, right? Hold me now, right? You have to have this multi-dimensional approach. Look at this breakout. 3 bars, we're filling the void. The sellers are going to come in right here. At that wick, the sellers should come in for a skosh. If they don't, we're going to clean house. We're going to fill that rectangle now. Now remember, you're still holding these insanely swing traded orientated buy limits when you bought at the beginning of the week thinking, oh my God. If you have stops that have not been taken out, you could have broke out traded this. You might even be up overall because you're holding losses. You're holding on to losers with wide stops. If you were able to take off these, I had to take all profit key in my platform so it wouldn't work because I'm a scalp. I would have a dedicated account, a scalping account, designed to scalp tight spreads on that broker. You need a tight spread broker that you could trade that on. The swing trade broker with the lousy spreads, you could swing trade that, and you could trade stuff with terrible spreads. You know, you could trade the Mexican peso, or Turkish lira, or some ridiculous instrument, and just say, you know, I don't care. I got 500 pip stops. It's a kibitz. You put the phone and you look at the thing right. You're swing trading it. You want to try to scalp the Turkish lira, right, against the Polish whatever. It's not a scalp. Scalping is maybe British pound, maybe yen, maybe euro, but you don't want to go illiquid on this stuff. You don't want to try to scalp the Canadian dollar necessarily, unless you're really good. Of course, that's just going to be limit order trades anyways. Okay, so here's the sell trap. You sell. Now you got to be a range trader. You're still holding these buy limits, mind you. Still holding, haven't been stopped out on that broad. On the other account, you're still holding in the swing trade, but you're scalping, you're managing this. You have 2 accounts, 1 instrument. It's okay that you're underwater on the swing trade because you've made money on your scalping account. Now your scalping account, you can take money out of that to pay for your hookers or whatever you need. And then you can hold that swing account and you'd be surprised, I had a demo once. I opened up 5 years later. I still had a pending position in there. I was like, you cannot believe how much money you can make and lose in 5 years. When you reopen this demo, and they never close that demo. Some demos have a 30-day expiration. I think still trading. I'm like, holy God, look at this entry, right? And it didn't take any patience because I didn't know it existed. So another thing is you want other people to trade for. You want to give other people stuff to trade and hook them up. Like if you've got kids, or better to have your kids trade for you because they're not going to say, well, you have to tell them, listen, this is your job, right? Instead of cutting the lawn, you're going to place orders for me because you can't have friends trade for you necessarily, right? It's very dicey because there's going to be a little bit of a, well, see, just say the word money, you're already in trouble. I can guarantee you, say the word money, you're in trouble. People are gonna, money? What are you, gangsta? So, the guy posing with a bunch of money. You can't even say, you live in a world that's just so on lockdown. And the do-gooders trying to nanny state your life and fuck it up royally. So it's the old thing, get out of my way. Look at this sideways action. Huge doji right now on the daily, on the weekly. How is this going to resolve? So I can't speed this up, so I'll just pause it. So I'm sorry, I left this. For some reason, the robot's playing back the market quicker than I thought. And I just wanted to show you, I kind of got a little bit sidetracked there. But this is the trend line I drew down here. If you remember where I was in the chart just a minute ago, I said that you're still holding right here. Look at this psycho retrace right up into here. Now, this is the blue area that finally filled. And somebody just asked me a question about what kind of trades you put on. Now, here you can see, I think you can see, we go into this congestion again. You're going to put on a psycho hedge here. God, why is this thing playing back so fast? Is it getting near the end of the data? But I don't think at this point you can see a robot would have getting annihilated. I think the robot finally took a loss here. It finally tapped out, I think. This trade up here. See that blue line? It finally gave up, or it went the other way. But look at how we dipped down. Now look at all these fractals that have shown up, Bill Williams entries that you missed. You're trading counter to that. See, this was the ultimate liquidity entry, was from here to here is your normal entry, and you got filled. Now, mind you, you have to be able to adjust to this situation. Here's your stop entry, ATR breakouts down into buy limits. Again, for the retest here, once again, you need to be able to deal with pure chaos and the fact that we're engulfing the previous week right now. This here is the high. These markets are so, like I said, you're in for if you're running moving averages, You're in for some punishment. We just took out the high of the week. We're going after the high of the previous week right now. You have a huge hedge on here. If your profits are set to take 100, 150 pips, 50 pips, here's a triangle. You can see the buy limits would never, if you bought down, you never got filled on buy limits here. Low ATRs, breakout strategy. Limit strategy and breakout strategy combine. Limit strategy, breakout strategy. Combining those, it doesn't get any better. You're making money. Now you could do analysis and dump all your comments out of the platform and find out which was the better. But you kind of know when it's happening. Here you're up 200 pips, right? You got to sell here. You got to sell up into that. You definitely got sell limits sitting above here. It doesn't matter where you start the story here. And you can play this in real time on the weekend, whatever. But this is the original. See, I was underwater here. I said, if you are still holding your limits through this, you're actually in profits right up to where you know you should sell. Here you never got filled on any of the sell limits. Here's the triple bottom becomes a top perfectly, right? That doesn't happen very often. Look at this floor becomes a ceiling. And even this floor here, the very bottom rung, trap below, buy stops coming in, the voids forming above, the voids forming below. There was a huge void here that filled. Now look at this long void. Now here we come crushing up in. Could even take out the high from 3 weeks back. The new week just started here. Are you still holding? Is this your swing trading account? You may even take out this eventually. Look at this thing crush. Now it's filling here. You're going to start selling. This is Sunday night. You're selling all the way up into here for the next 50 pips for the scalp pullback. See if we get it. Here's your buy stop, sell stop, ATR, if you're willing to risk 40 pips bracketing. Sell stops are stacking up. You're still long. You added to your long. Now you're selling up into this. You got, when the ATRs get small, you're going to put on the straddle, the hedge, the breakout either direction, and hopefully you've taken some money off the table by getting in this monster breakout, which I can't make this into a daily chart, but all you have to do is kind of like zoom that out. We don't want it to be looking at the world like this, though. Here is the, this is, I don't know, this is like 2 years ago or something. And this is that summer. I was talking about the summer not being a good time to trade. How's that? We're missing data here. This is July. Summer's a bad time to trade. Look at this psychotic sell-off in July. What? That's loser speak. It's complete loser speak. Victimhood. Those institutions, they know more than me. They got analysts. I've been there. I've had people, I paid $200 commissions because they had a guy from Mensa trading the Swiss franc, blowing shit up all day long. He did the math. He's from Mensa. He's a dumb fuck. He needs to be a dumb fuck, actually. He needs a simple mechanical trading system. Here, okay, you just got trapped on ATR breakout, true range. This guy's asking me about ATR. I'm talking true range bar per bar. We live moment to moment. You have to be a schizoid. Like, you wouldn't live your life like moment to moment like this. You would live, I've got a goal, I've got to do this, I'm going to do that, I've got my bat wings on my back, I'm ready to fly. No. It's moment to moment. You're with a sociopath. Imagine your girlfriend's really hot, but she's out of her fucking mind. If she wants to go to the beach, you're going to the beach with her. You are, okay? Now, in hindsight, you'll say, I wish I would have never done that. I lost my keys in the sand because we were humping like rabbits. The sun went down, and now I had to have a key cut for my high-end car. $300 to cut a new key. But then you look back on the good times and say, well, it was the most fun I ever had. And you would never live, of course, unless you're a movie star, right? You have no money to burn, you never live like that. But you kind of have to have that mentality on this thing, bar by bar. Oh, you're short now. Isn't that crazy? So, like I said, you're selling up into that. You have another reason to put on a hedge here. No fill, 8 hours of sideways, you're short. You're making money on the sell limits. You sold up into that. You're getting in on breakout strategies also. Dual approach. And the clock. Somebody asked me about order types. The market orders are, I would say, you want to get in market orders before the volatility heats up. When the volatility heats up, you have to back off on trading at the market and just trade every hour, every 4 hours it comes down, you buy a little bit at the market for good luck. You can't beat luck. Will it keep, like even here, when this is going up, big up candle, sell a little bit. Sell, 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 sell. These last sells up here, you made 50 pips on the pullback. And maybe you got stopped out of these. It depends. Here you're long on ATRs here. You scalped out of that. Every 4 hours this came down, buy at the market, buy at the market. You're only going to do 6 trades a day at the market, say. So you limit your, I try to come up with a percentage to answer this guy. You're going to have to find out what is the best to do. Maybe 10% at the market orders because they suck. They're not mechanically based. They're not going with the way the market's going, and your limits are super deep, and maybe you have 80% donated limits, but you're only filling in 40% because you placed the limits too wide. There is no panacea. There is no holy grail. You're going to have to judge that for yourself. And how much money do you want to make? If you want to really kill it, you're going to have to take more risk. If you want to just skim, you want to make this high probability breakouts, okay, I didn't trade big on there, but I'm making money. I'm not losing money. I'm doing good trading. I'm a consistent trader. Doesn't mean you're a winning trader. Doesn't mean you're making big money because you're consistent. You could be consistently making tiny bits of money. And I trade breakouts. I trade swings. I do a little of this, little of that, right? You take a walk on the wild side, right? So you need to take a walk on the wild side in these markets. The markets are wild. You need to accommodate the wildness. Okay, I'm selling up into this. I'm long on this hedge here. Every week's a different thing. But if you've written a hard stop, and the guy asked me, do you move the stop? No, I wouldn't move the stops. You plan the trade the plan. If you're getting stopped out, you need to write the trade plan, and this is where you would want to be consistently launching scripts that you let play out. The discipline, letting that script play out, let it do its thing. You wrote it, you designed it. Now I'm talking about trading 40 trade plans. It could be buy stop only, but there's, okay, this one's got the 10, the 13, the 20 pip stop, the 22 pip stop. They're all happening simultaneously. Here, you're getting long on ATR breakouts. You cannot get long ATR breakouts now. Hopefully you're selling into this rally right now on limits, and you're cashing out of these longs. If you're looking back, you're engulfing 3 weeks of data now. 3 weeks. You're selling up into this. Sell, sell, sell. I don't care if it looks like it's going to keep going up. You can't think like that. If it makes you feel any better, look at, you have another 150 pips you could go. You got another whole bank of orders here waiting to get filled. Got to get that sizing right. You're short right now on limits. Okay, you're scalping out. You're going to get out of stuff here. Now, maybe you do want to intervene. So you'd only intervene if you're really upset, and this is where psychology comes in. Here, buy stops, right? Small ATR, you're trapped on sell stops, you got buy stops pending here. You're buying into it. You're selling into it. You're in a hedge. You're a hedge fund. It's still going up. Can you take the buy side with sell limits above you? Not a lot of people can, And the only people that could do that is people that never traded before, because if you told them to do it, they go, okay. Sell stops pending below, maybe. Maybe you are getting stopped out. And hopefully that you sold here at the 50, you're going to have scalps. If this pulls back, I don't know what's going to happen, but if we pull back to here, okay, it's got to be careful. You got to be careful out there driving. This is going to be a really dangerous summer. The economy's coming back, and now people are going to start stealing stuff, and I mean, I'm pro good economy, but you're going to have to buy a gun now. Things are going to get a little crazy. People are going to let their hair down now that we have now that cash flow's back. So it's actually more dangerous when the economy is doing good. So your buy stops, just like the market, when it's volatile and there's more trading, it's more dangerous. When it's quiet and you get on here in this quiet little thing and you're happy to take these pips and you're selling up into that. Now here the trend traders are making money. Here you are, have a top become a bottom. Not a lot of trend trades out here, but here's one. Top become bottom, small ATR, you need to go long. You can't, you're selling up into it also. I know it sounds unbelievable, but you have to be two people. You have to be a bull and a bear at the same time. And you have to have trade plans here where you're making money as it goes up. Let them, okay, you're long, you're making money on the long side, you're still selling into this pool. This I marked off the deep pool of void here. We're long, we're selling into it. You're a hedge fund, you're a trader, you're selling the next 50 pips for certain. There's pullbacks. Okay, you just got filled on that 50. Now you're looking for a 50 pip pullback. You may not get it. So this way, you're a trend trader now. By default, by stop entry. Here you have a huge hedge on because you're going sideways. You also have top bottom. So if you're trading at the market, you're buying every 4 hours, any pullback you can get, you're buying into that. And it's not easy because you just told yourself, I'm going to sell up into that. Now I'm buying into that? Yeah. With super tight stops. Now if you snugged all your stops up to 12 to 14, 16, 18, 22 pips, you've got 8 orders running, 2 pips apart. And you've got your finger. I'm presupposing you're scalping this. The other account's doing the swing trade, right? The other account's getting killed right now. Possibly. So diversifying, different accounts, different strategies. Multi-linguist. How would you, if you could speak 10 languages, you could fly around the whole world selling bullshit to people in their language. You're going to make money. If you can only speak one language, and English happens to be almost like a broad-based language, and who's going to be the winner? Who's going to survive all the slings and arrows of outrageous stop-outs? Who's going to survive that? The multilinguists. You have to be a buyer on stops here, and a buyer on sell stops now. You put on the hedge now. Is it going to keep going higher? You don't know. Your limit count's getting smashed right now. Huge drawdown. Just like when I sold into the Bitcoin. But you're not just living off of that one. You cannot just do one thing. You need to accommodate the crowd, accommodate the market's behavior. Okay, now my swing trade's killing it. I just got filled here on the scalping account on the 4 hour. ATR, I'm short. I'm long from that last burst, and hopefully I made enough money on this ride to here. It's an ever-evolving, constantly unfolding clusterfuck of chaos. You have to have trade plans to accommodate this stuff. We just went down for 4 hours, bought one at the market. Put a tight stop. Okay, scalping out of that. Getting filled at top become bottom here. This is the come back to the scene of the crime. We're still marching north. This could just go up for days. It could also be the top of the week. You don't know. But it's okay because you've hedged your bet. You compromised. You do not have a bullish or bearish view of this. You have a fill the void, consolidation trades. Here, it's starting to back off. Okay. Buy stops are getting triggered now. ATR entry. Top became a bottom. You're going with it. Your longs are overcoming your shorts at this time, maybe. Maybe you've totally blown up the other account, but you're focused on, you're going with what's happening. Fuck looking left. We already looked left. We established there's a void up here. We're going into the void. Sell. You're selling here. You're selling 50 pips above. You're long into the sells. If you run 4-to-1 ratios, you know you're going to kill it, but you may overpay the spread, and if you're paying commissions, you're going to have to put that into your business plan. As you snug up the stops, the more scalpish orientated your approach is to the market. Swing traders aren't going to, like if you're, this is trading the shit out of the market here. I'm just trying to say you could trade every bar. You wouldn't have to. Maybe you're going to just go for, I'll just trade top bottoms, but you're not going to be the guy that trades this. You wouldn't be long here on more orders because of this small ATR, and this might be the fat 50% or 20% of your profits is coming from breakouts, 20% of your profits are coming from top bottom technique, and 20% is coming from we're about to get filled on a basket of limits up here. As we march up into the targets, which is the previous floor, which we're almost to the wick now. We're coming up into the wick floor, the actual floor. 50 pips above. No need for Fibonacci's. Our focus is volatility. So you're rehearsing this. You have to do this. Otherwise, when the market's coming at you, bar by bar, and you're like, what do I do? What happened in my moving averages? What happened to my fibs? What happened to my trade plan? All this shit. You know you're selling up into this. You know you're long into it on some level. You're not going to sell heavy into this. You've laid those orders out, and your swing account's getting crushed right now. Did you get the stops right? Did you get those ratios right? Were you even able to, and I'm also presupposing you'd never slept. You're rehearsing this as if you never sleep. You're able to take advantage of all these entries? Unlikely. And Asia sessions, I think, are obvious because they're these small ATRs. So you have to take that into account too. Here's a whole week of sideways. Nothing happens. Now everything's off to the races. Now I'm making money on my swing accounts coming off the floor a little bit. If I sold more the higher it went, I would martingale sell into that. I'm scalping to this Twin Peaks here. Okay, now I'm making money on the sells. I've cashed out of the volatility. The ATRs are too big. There's nothing but limit orders now. Now you come in with buy limits. All over again. Same story. Different. Buy limits are sitting below now in a pull down here. You're going to play the same game of buy the crush and the scalp bounces. And hopefully you've scalped out of something by now, crushing into this and buy limits maybe. It's very, it's seriously a very dynamic place. And you need to have you need to wait 4 hours for the completion of the 4-hour ATR, the true range of that bar. Like I said, you're short up into that. You were long into that. How did you balance that out? That's what's going to separate the men from the boys, they used to say. Now, you'd have to say something else now, but in here, you know you've got this order bank pending maybe all week long to just trade that bounce into this area here. We could be cooked here. Now here's the stop. Now you got a small ATR, you're putting on a hedge here. Buy stops, sell stops right there. No questions asked. You just got filled on a trap to the south side, possibly. This could be it. This could be lights out. Don't forget, this could be it. We could crush down here. Now you put on even a tighter, bigger hedge here. Very small ATR on the last 4 hours. Constantly launching different trade plans. Is there any other way to approach this? If you had to trade every 4 hours, gun to your head, make a trade. Do a trade. Make a trade. You need to be able to have trade plans for the dimensions that are presented, the hand that you're dealt. This is how these guys win at poker. They can play a bad hand out. They know when to say, I pass. This is the whole, you can make money, you can make money as a gambler. Know when to hold them, know when to fold them is a cliche, but this is know when to stop entry, know when to market trade, know when to limit place. If you spent time on that, instead of whipping out these fantasy fucking fibs and these Gartleys and all that bullshit and the moving averages that are not self-adapting, you would make money. You would make money in ways that you didn't want to make money. I can't believe I'm making money from the stupid fucking volatility breakout system. And you may resent the fact that stupidity makes money because you're an intelligent person. And you want to see those limits get filled. And it's not happening. I'm frustrated. Now here, if you took the approach of buying at the market, there's only one market order here. And the percentages really aren't accurate because the market's going to tell you what percentage are market orders. Here, if you only bought every 4 hours it's down, and of course, if it's down 50 pips, maybe you have to put a 25 pips stop market order here. You can't have a static stop. It has to be based on the last known move, and you have to be willing to stand in front of somebody and get punched in the face also. So when you take a little martial arts classes, I had a guy, I think I told this story years ago, I'm in martial arts class, and there's a guy here that has one arm. I'm not kidding you, one arm. And now what am I supposed to do with this, right? He's like a chick now to me. So he comes after me. We're sparring. He's beating the fuck out of me with his one good arm. And I'm like, dude, I'm giving you the one arm break. And he's like, but he's treating this as like this is the highest, most dangerous, is Kwai-Kon karate, Kwai-Kon. We're on rice mats, bogo mats. The guy that runs the class, we're punching makiwara boards. Okay, these are wooden boards. The guy that owns the dojo is punching a metal pole mounted into a wood floor that flexes a little bit. And when you show up, you can hear the pounding of this guy. Now his knuckles are built up a callus. He's a chiropractor, martial artist. I said, aren't you worried about your joints? He goes, no, my body will adapt to that. So he had a big callus, and this is his weapon he carried with him. So here's a most hardcore martial arts I've ever been in. The one-armed bandit comes after me, knocks me out. I've never been knocked out in my life. So I'm sitting there like a nerd that just got punched, and my lower lip's quivering. I see stars like in the cartoons. I don't know what the fuck's. You got filled on limits here at the double fractal, hopefully. So. I wake up and the instructor says, get up, you pussy. And I'm thinking, listen, buddy, I'm paying for this class. Can I get a little safe time? Instead of safe space, I need a little bit of recovery, safe recovery. And now the other guy never lost his composure. The one-armed bandit's like, and now I'm like, okay, bitch, it's gonna be like that, huh? So, you know, I don't know what the point of the story is, but the point of the story is taking punishment, right? And not being disorientated. I guess this is what a coach would do. This is what a power trader is supposed to do. Oh, it's okay. You just blew up your account. Get back on that horse. Now, a lot of people won't get back on that horse. I certainly had a different view of people with disabilities. Now, people in wheelchairs, if they even look at me, I start beating the shit out of them. Just kidding. But Now you have overshoot the runway. Now you're on the other side of that. And you're like, well, I'll never do, and you overcompensate, right? And they call it overcompensation. Now you dial in, okay, I'm going to go that way. That really works. Overload that concept. You're still in the same trouble you were when you're trading a bad trading system and not trading big enough to make you want to kill somebody. Here, ATR breakouts, right? See, ATR strategy here, you put a hedge on right there, small ATR. You're getting filled on those sell limits. They're still up there pending, don't forget, and you're plucking them off and using them as, what I do is I leave the pendings up there. So when I see it come back, okay, I'm scalping out of that right now. I'm getting filled on stop entries also on a breakout hedge on that thing. You could just do it from the limit side if you're good at that. I'm describing this in terms of taking advantage of dual strategies at the same time. You may not want that, may be too much to get your brain around all that trading. But you can see the 50 pip grid, the 50 pip targets. Here, you're trapped, but maybe you scalped out of that. You sold up into this whole thing, and if you zoom out, this level that I marked was the wick low. That was the wick low from back here, but the closing low is above that. So mark off the close. See the wick lows here. Let me drag down the closing low. Now this is the time-based turnaround. And where does that come out to? It comes out to right here. But you would have sold up there anyways without regard to the precision of that entry. You would just have a basket of sells. The market comes up into those sells, and you're getting, because you have to get in a zone. You can't get in one ticket. That is the ultimate entry. And maybe you just traded this pullback and you're in super hairy and you're like, I like this trading system, but for me, I like to get in a cushion zone. So I don't know if that helps, but this is rehearsing the 4-hour chart. Dual strategy, rehearsing the 4-hour chart. I still have my buy limits pending here. And we're coming into that. I'm short on breakout strategy here. I'm also short because I'm short from previous sell limits up there. We have no bias. We go which way the wind blows, and just like you would never do in real life, is become at the mercy of, like, if you went out in a boat and you were at the mercy of the wind and you just had, all you had was, do I raise the sails? Do I take my sails down because it's too windy? You don't know which way the wind's going to blow. You don't even know the weather that's coming at you. You have no clue. It's like olden days. How can you survive that? You have to look at it like that, because it's just price. And you can make these suppositions double top. You could say, hey, it's double top up here. Yeah, you should have sold up there. You knew that was resistance. Now you're up in the trade. And you got small ATRs, and you're adding to the position on ATRs now. Or now the hedge, right? You go flat here. Your buy stops would take you in the other direction. Get the sizing right. Maybe go flat right now. You're a human, you can see. Go flat, reload, maybe take off all pendings. But if this trade is good now, it's good forever to buy low and sell high. So maybe leave these pendings out here, these deep pendings. I did it in a video where I left the pendings out there, and it turns out that that's also a good place to get in. Even if we put on a hedge here, go short and long at the same time, let us get stopped out, let us get limited in. Stopped in, limited in. And this is the thing. Those order types are so critical because they tell you right off what kind of trader you are. Limits are for retracers and swing traders. When they're far away from current price, when they're close to current price, they are, I'm trading in a super narrow range. Here, your buy stops are getting triggered right here. You bought every 4 hours it went down, you're long on market orders. Here you've only got one market order, so you can see what the market orders would have been, wait to the end of 4 hours if it's down by the market. If the ATRs are small, put in a stop to go the other way. If the ATRs are big, limits below, limits above. You could have limits above, limits below, even though you're probably not going to filled when the market's tanking. You won't get filled on the limits above till way later on, right? So when the market was tanking here during this phase of this smash down and this smash down, your sell limits that you threw up here got filled, and your buy limits didn't. But it took longer for the market to come back up and tag and bag that. But the market's constantly in search of fair value and liquidity. It's on a search. It's for your job is not to get trapped in a high volatility in a big. You don't want to get trapped on. See, here's two large candles up, right? Two big candles up. You don't want to be putting buy stops to try to get follow through on that. You're going to get killed. The only time to place buy stops, market orders, all that stuff, even tiny limits that are close are different than limits that are down here. Broad limits away from current price are obviously retest swing trades, obviously. Even on the top. And you need to, that trade plan has to be designed for a certain target. It may only be this because you may never see that, and you didn't. You got to take something out. There's going to be a backlash. There's going to be a seller's and buyer's remorse. You're going to get smashed and to smithereens. So that's all I can say. Good luck, and have multiple trade plans. Start off with one. I risk 20 pips to make 20 pips or something. Place that same ticket multiple times. You could buy one with the market with 20 pips stop. See what happens. It's okay to. You have to make it okay to lose. Okay, this is the thing. You have to be. You might even want to dress like a loser, right? To get in the mindset, you need to be a loser to win. I know it sounds completely anti-logic, but it's the only way to win is to embrace pain and loss. The market is a guy without arms kicking your ass with its feet. If this guy had no arms, can you imagine the break I would have gave him? I'd probably be in a coma right now. So you have to stand in front of the market. You have to dare the market. You have to have tactically placed orders, and that's all there is to it. Everything else, let the market prove you right. If you think that your fibs work, okay, put an order there. You may not get filled on that limit. But if you are really trading Fibonacci, for God's sakes, run 5 Fibonacci's layered on top and realize that 61.8, 23.3, all these really arbitrary, I got on a coffee cup here, wackadoodle numbers. Place orders 10 pips, 2 pips apart around the Fibonacci handle with peppered different stops, different take profits. Then I could say, okay, well, at least you're diversifying your entry. The problem with Fibonacci is, why is it taken to a decimal when it's complete ridiculousness? A 50 pip grid would serve you better. At least you could do the math on what your risk is. I'm buying every 50 pips all next week with a 400 pip stop. I'm willing to risk this account, and there it is, a swing trade, let it go. The swing trade account I just spoke of that would be running in the background right now is kind of up. If we ever crush down into these buy limits, that swing trade account is going to look like pure genius. And here we come, right? Go figure. It's pulling back. If you got in small ATRs here, that last bar, you just traded a breakout strategy into the limits. You're short on that whole thing up there. See how this is working out? Now, I used to trade like this all the time without stops. 8 years ago, made a ton of money, no stops. You know what? Fuck them. Selling up into that. Now, guess what? And I did this trade. I'm killing it right now. I'm holding. I'm like, yeah, baby. And now we're coming into the buy limits, don't forget. I could be up 300% on this account if I sized it right now. Right now. And you know the exit's here. You see the double top? You gotta take profits here. The market's told you, get the fuck out here at this double top. Buyers are coming in. You dump the whole position here of your shorts. Now your longs are making money. For the scalp, did you see that just happened for a second there? There was a 20 pip scalp in there. Now it could keep collapsing in. Maybe you haven't even opened the books on that one trading account. Get 5 brokers. Trade one instrument. Trade a different strategy on each broker, same instrument. You'll know, hey, you're sleeping. You're about to get filled on 50 pip handles here while you're sleeping. Why do you care? You got a buy limit here at this wick. You got a buy limit at this wick, and you got buy limits just all the fuck down there. Why would that? Why do you need to see a particular price action unless you're going to babysit? Now here, buy stops and sell stops, right? That's price action entry. Volatility price action. Sell stops, buy stops. Maybe you're flat long on limits. This is the constantly adapting. Okay, I'm getting filled. I'm filled on sell stops. I'm going with the flow. I'm still short maybe. I'm adding here. This is going to be the tough part. Okay, I'm getting filled on my 50 pip buy limits now. Some are scalps. Some aren't. My swing account's killing right now. Do you realize my swing trading account's making a ton of money right now? All the way back to the starting gate. You ever seen this trade? All the way back to here. There's my entry right there. I just got filled on that wick, possibly. We could scalp the breakout of that 4 hour. We just cleaned up 50 or more pips. We just bought at the market because we were down for 4 hours. We bought one at the market. We're long on limits. This is the best of both worlds. You're filled on limits. You're filled on market orders. Now you're now you have to stop trading. Let it go. Just let it go. As my first wife used to say, just let it go. She's now my ex-wife. Couldn't let it go. Stubborn. Waiting to get filled on limits here. Possibly still short on the other account. ATRs, we're waiting for an update on the 4 hour. Okay, they're going to crush it. We're going to buy. We're going to buy at the end of this 4 hour period. I'll buy another one at the market. Another losing trade, mind you. Got to get used to losing. And we'll get used to waiting. So you have to have a workaround for that. Okay, so now buy stops, small ATR, buy stops, sell stops come in. Now you're in breakout strategy mode. And now you're going to wait. We go down another 4 hours, I buy one at the market, and maybe I'm getting filled on limits. Let the market decide. If I bracketed the last 4 hours, I'm waiting to get filled on a breakout strategy. Meanwhile, I'm long on limits from the plunge into this liquidity zone. I've seen this trade a million times. This is the plunge, fills the void. Like I said, I have never seen this chart. I'm playing back new data. I said this blue area is the buy zone. How big were those tickets? How tight were the stops? That's totally up to you. That's going to separate whether you're going to win or lose. Nothing else is going to help you. Do you have the patience to wait for this to retrace where the floor came out? Can you wait till it comes back to where the seller should come in? Is this going to be a retrace, or is this just a dead cat bounce in a further plunge? You do not know that. You know you're up on your limits, and your other account hopefully had profits that was cashing out on this 200 pip plunge. These are 50 pip black lines. Multi approach. Always is going to win to be. Another thing, I took Tai Chi classes, okay? I spent a bunch of money on martial arts. Tai Chi, my instructor, paid 1 year with this guy, right? How about 100? I spent, he wanted, just like the shrink, he wanted to see me twice a week. So I was spending $200 a month on this, $280 a month on this Tai Chi instructor. Guy's out of his fucking mind, right? He says to me, you got to come back different. If you're fighting, every 30 minutes that goes by, every minute, of course, a fight, right? Every maybe 5 moves, every 8 seconds, you have to have another approach. You have to come back as a different person. If you keep coming back as the same person, the other guy is going to say, oh, I know you're going to just keep leading with your right hand. I know what you're going to do next. I'm going to kill you. Every move needs to be unique. When you're I'm only saying because I spent this money. I'm giving you a free inside scoop on this one psychotic Tai Chi instructor I have that actually was kind of mean to me, I would say. I needed a safe space. This is this is like 12 years ago. He says, so he would chase me down and knock me over and go, he would laugh at me. Haha, see? I'm like, dude, I'm paying you like $80 a session here. Could you please keep the laughter to a bare minimum? But, so all these things I was doing, not to kick people's asses, I was doing it to be a better trader because I was reaching into a different topic and taking that metaphor, I want to bring it into trading. So how can I be a samurai trader? How can I embrace losing? How can I be come back different? Come back with I have the breakout strategy. I'm breakout guy. You can't catch me because you can't. This is another thing in Tai Chi. You hide your center from people. People go to push you over. You have to pivot, roll. You have to move, change your center. Once they find your center, they're going to push you. They have to lightly touch you at your center. They're going to knock you over. But what if they can't see your center? And what if you're standing 3 feet into the ground? So you're rooted in the structure. Your feet are into the structure of the ground. You visualize that. So you psychologically are able to grip the ground. You're almost grabbing the ground with your toes in a way. But you're trying to get maximum. Also in Tai Chi, what you do is you psychologically lower your center of gravity as low as you can. And you drop your blood to your lower body. I mean, these guys that can really do it, like a yoga guy that can stop bleeding, supposedly, right? But you lower your blood pressure. This is how they do it. So how does a guy get into a small thing? He shallows his breathing. So to be the ultimate survivalist in trading, you need to adapt. You come back as a different person. I'm breakout trader. You're wearing several hats at once. Swing trader, breakout trader, market trader, trade at the market. So to have this blend is going to make you unfragile and you'll be able to survive anything that comes across. Your car breaks down. Do you throw your hands up and scream like a baby? Or do you say, I think I could try to fix it, go to YouTube, watch a video, call somebody. If you make a lot of money, you just call and they pick your car up and they swap out and they give you a loaner car, right? It depends how rich you are already. If you've had to MacGyver your life, then you're going to think like Tai Chi. And a lot of martial arts, these nunchucks came out of the fact that that was the only weapon available in a rice field. So a lot of these weapons were created by the fact that these people didn't have any defense mechanisms. Physical ones, not psychological, which is a whole nother thing. But you take that psychology, like if you're scared to lose, you're really in trouble. You really got to enjoy losing. just sounds terrible. But you have to look at it like, okay, I'm not dialed in yet, and I've got a bruised. I've just lost. My nose is crushed by a one-armed martial artist, and the guy was short too. Okay, so everything included. No doubt I got knocked out, and I almost thought that the instructor hired him as like a decoy to test the people in the class, like a conspiracy. Yeah, let's have some amputees show up in here and see if you're willing to beat the shit out of them. Most people won't. I mean, I consider myself to be almost a nice person. I'm going to go easy on the next girl that, the 5'1", 100-pound girl that says, hey, oh, so it's going to be, you want to fight about it? I'm probably going to give her a little break, right? Do the old Three Stooges, hold your hand on their head and they're swinging, they can't reach, right? And just laugh at them. But maybe they're going to kick you. So here's the sideways. We'll wait for the retrace here. And can you match the dynamics of the market? Do you have the skill set to tactically match the dynamics of the market? So yeah, get good at losing, and get good at being brave enough to place orders that you, of course, this your belief system. You're going to have to damage your belief system about what you think is the correct thing to do under the circumstances, and trade it on a demo first if you're afraid. But you'll see that multiple dimensional approaches, you know, the shapeshifter, you have to be able to adapt to current weather conditions. In real life, if you don't have air conditioning, you have to know when to open the window and when to turn on the fan, and when it's not appropriate because there's a fucking monster storm coming. The fan's going to make everything wet if you... So it's just like real life in a way. But imagine you could not see the forecast of the weather. In these markets, you really can't. Now here I'm making money on my limits. Right? I can see my exit. The swing traders are cleaning up. People that are holding here, we're starting to chop through these wicks. Sellers should come in. They're not. We look to get out at the painfully obvious floor here on the wick. I'm cashing out, right? As we go up here, look at the robots buying. So that maybe you're flat now. Maybe you're just made so much fucking money because you saw the small ATRs here. You traded that strategy. You thought maybe we could keep tanking. They said in the news it was bearish. Everybody's bearish because they got some stupid ass fucking moving average right now that's pointing down. You counter trend traded. You cleaned up on strategies on the other way. You could see this was going to be a great buying opportunity. So you're long on limits. Here you bought every 4 hours on market orders. There are no market orders now. You're selling on market orders, which you're cashing out of winners probably. And the next 4 hours it goes up, you sell again, which might mean you're getting out of your winning trades. So I think you could be a 4-hour trader. If you never slept, look at the money you'd make. Now here's the thing. If you have a trading partner that's in another country, they pick up the ball, you're both trading the same stops, you go, I'm going to go to sleep, your turn to take over. If you have 3 traders on the planet in different time zones, and you have a PAMM account, and you're trading that account, this is the way you would trade this to really maximize. Because while you're sleeping, I think I was like, I'm getting in the same formula. ATR is X, launch this. Within, pretty close. Everybody's running the same scripts, right? You've got an employee on the other side of the planet. You have one instrument you're trading the shit out of. You're cleaning up. That PAM account is killing it. People are investing. You have a guy that owns the account, right? People are depositing $100. PAM accounts. Go to Hot Forex. Find somebody in Europe that's trading. Trade with them. Investors come in. You're killing it. You want to make money? You need money? Open a fucking PAMM account, Hot Forex. There's a trader I talked to last year from Greece. I don't know if he's still listening. I guess I had zero tolerance for. I was frustrated with he was brainwashed with a certain trade plan. I couldn't get him to. He's at Hot Forex. He's makes money when people trade there. So he had a little conflict of interest. He wanted me to write a break-even robot. I'm just not into that. I'm not into churning people's accounts. I've had my account churned by stupidity. It wasn't by malicious intent. See how you had to sell up here at the 50? You had to get the fuck out. See you see your targets coming near. ATR breakouts. Do you notice that ATR strategies came in up here? I'm just not into that. But if you want to, set up a PAM account, sure. 3 people trade that. I could trade one leg of that. Now, this presupposes that the traders involved, anytime you have a partner, do they agree with you? Do they think you did something stupid? Do they think this is where you maybe don't want to do that, right? Maybe you want to have a hired gun. You pay them X per trade placement. They have no opinion. They've never traded in their fucking life. You just tell them, you see this, do that. 2 traders that know how to trade are going to have a fight over what's the prudent thing to do. Look at this pull back to the fractal. 50-yard line, buy stops here, sell stops here. You almost got a perfect top bottom. You're buying on the clock every 4 hours. Don't forget, you bought here at the market, you bought here at the market. You're long on to buy at the markets just because it went down. Just because it went down. Buy stops pending above. You're long on limits that you peppered in. So no more buying at the market now as it goes up. Don't chase it. Let those buy stops fill. Confirmation on entry. Boom, you're in now. And now maybe you're wrong. Sell stop's got to come in below here to go the other way. Now they might whipsaw you. They might. But you love losing, don't forget. Okay, now you're winning. Great. Now, so all this is possible. It's a 24-hour market, but that's another thing to consider. I guess I'm going on kind of long here, but I'm just talking about if you had a business and it was open 24 hours, you need somebody that's going to come into work because you got to go sleep. So they take the ball. They're trading it. You wake up. You're like, oh, yeah, great. You did. This is what we plan on doing. Not to mention you've already got the limits sitting out here. So selling up in here, target, you've just been hit. Boom, you're out. Cashed out, you sell here. You scalp that pullback there maybe. Right? Obviously, this was the floor that was taken out. This has got to be your target. The sellers are coming in. Go figure, right? Now you're up 25 pips. Now they're probably going to keep going up. You have sell limits above you again. Maybe you're still holding from here. Your swing account has bought this whole plunge. Now you're going to have to take the swing account. You can't just let that go either. You see what's going on though. So you can see all that this whole trading thing. Swing trading was a gold mine. I am not hindsighting this. I am foresighting. I'm telling you right now. You never got filled on these buy limits down here, but you had to buy into that plunge. You had to. You did not have a choice. This is a very fast sell-off, unlasting. Every 4 hours you bought at the market. Maybe you got stopped out. Maybe your stop's down here. Maybe you have end-of-the-world stops. Maybe you're not trading with stops. You're up about 25 pips here, selling at the 50-yard line at previous support. ATRs are too big for you to put any stop orders in. You're letting those come in. You got buy limits sitting here at the last known top bottom. This will be a top bottom entry now. You just scalped 40 pips out of that trade. You have to scalp out of this stuff. Your swing trading account may be still holding because you got in down here. Let that go. It's a small account. Let it go. Just let it go. So I don't know if that helps, but that's the only way to do it, in my opinion. If you got another approach, you know, go for it. And I'm just saying, for me, I found that I cannot be one person. I cannot be one trader. I have to be like Sybil, right? You have to have multiple personality disorder to trade. So what you're taking a pill for may be ruining your trading. If you have multiple personality disorder, multiple order type disorder, it could be working against you to try to behave and be a logical. Here, so buy limits are filling here on this top become bottom. They're crushing you. See the ATR? You missed the ATR trade. This is the end of Friday. Sunday just opened, so you're getting slippage on that. And you just got filled on this. Did you put in too tight a stop? Maybe you did. Did you put in a spectrum of area? You needed to buy that top bottom. You're in an uptrend. How do you know you're in an uptrend? Because you can draw a fucking trend line. Was this the ultimate entry? Yeah, but it's only a scalp, see? Watch it smash around. Watch the volatility come in here. They could plunge it right now. You needed to take something off the table on that. So play this back, the 4-hour chart. Take a look at it. You don't have to go back at this speed. Kick it down. This is 32 speed. I don't know why 32. Right. Go figure. Take it down to 30 speed. Get used to watching. This is going to save you money and screen time. Like the guy said, he would save a boatload of money. Put it down to almost real time here and just see if your stuff works out. See if your trade plans work out. But see how every 4 hours there's a trade. The market's telling you. And if it's not telling you that, it's telling you that you can see this low. You know it exists. Could we retest that? Yes, put a buy limit down there. No questions asked. You don't need to ask that question. You know you need to buy low. You know you need to sell high. You know you have sell limits sitting at the 50. You have scalp bank up there possibly. Maybe you have swing trade accounts peppered all the way up in that. You don't give a fuck. You can't. You cannot care. If you care, you're looking for confirmation. If you're looking for confirmation, you're afraid. It means you don't want to lose. Oh, because I want to make sure. You can't make sure. You can't afford to make sure in these markets. It's very counterintuitive. What I'm saying is completely against everything you've ever been taught, but it's not going to help you to kill it in these markets. You need to be you need to trade the black swan. You need to trade the outsider. You need to trade the unbelievable entry. Swiss franc, unpegged. Retraces, takes out the high of the unpegging. Explain that to me. One day it drops a gazillion pips, would seem like, if you're used to 20 pip stops. Was that not the best place to buy? A lot of people shied away from trading that. They felt betrayed by the Swiss franc. I can't trust it. It's like a Doberman pincer. I might lose my arm. You need to be able to, you need to embrace punishment, okay? So you want to sleep, the people that sleep on nails, why do they sleep on nails? Conditioned. Okay, how do you survive a gulag? How do you survive Nazi Germany? How about Frankel? Look up Mr. Frankel who survived Germany. You want inspiration on how to lose? Viktor Frankl, who went through the Nazi, people say it didn't exist. He went through the concentration camps. Listen to him, his lectures. You want to hear somebody that says, listen, we took this bad situation and we enjoyed it, right? How do you enjoy this? You embrace it, you get leverage on that. Your losses are leverage. It's telling you there's opportunity. You just miscalculated. So that's my 2 hour and 23-minute rant. But yeah, get a hammer and start smashing your fingers, and you'll be a better trader, is what I'm trying to say.